I'm Jeremy McManus, General Manager Commercial and IR for Neometals. A little bit of a snapshot on the company. So we're an Australian listed company, recently dual listed here on AIM, and we're a battery materials producer. So we've got 3 core technologies which we're deploying. We've got 3 different business units, and the focus for us is around sourcing materials that someone else has already dug out of the ground. And we're really targeting opportunities where we can decarbonise and support the circular economy. So we're here raising awareness in London.
Hello and welcome to London. Jeremy, we actually saw you a couple of months ago, I think it was. So you were spending a lot more time here in Europe, but phrase you just used, right? You're a battery materials producer.
Correct.
Slight change in description to the way you positioned yourselves before, which is more sort of project focused. So why that? Why have you just changing the description now?
Yeah, look, I think there's just been an evolution of the business over time. So we listed originally back in 2002. It was a resource company originally, and over the journey, it's become very clear that, you know, we sold mineral assets and we've divested things, and now the focus is solely on projects that are generating materials. So that distinction on producer is because our recycling project has a small scale operation.
Yeah.
So we are a producer, and strategically we've got a really clear focus now that everything pertains to decarbonisation and the circular economy, and this concept of sourcing feedstocks, if you like, that someone else has already mined with a view to recycling, recovering, downstream processing, and that's really what we're all about.
Well, it's kind of interesting, because you started as a miner, segued over into this battery EV thematic, okay, and you're kind of reframing, just tweaking slightly the way that you see yourselves. It's all very fluid. And you've been over in Europe a few times now. You've got your projects. Again, you've got the Vanadium project. We've got the battery recycling project here. We're having lots of conversations with institutions, with OEMs. Obviously, you've got your deal with Mercedes, which we'll talk about in a second here. Are things being affected by the kind of Russia-Ukraine situation in terms of the need to kind of secure critical minerals? What are you hearing out there? What's the feedback?
Look, I think certainly what's the regrettable stuff that's going on in Ukraine seemingly is fast-tracking this desire to have, raw material supply chain resilience, particularly in Europe and everywhere. I think it's fast-tracking, the concept of the rollout for EV and cell making. The other edge of that sword is where all the raw materials come from. So we're trying to do something about that with the recycling to help, essentially support raw material extraction to supplement it. And otherwise, on one of our projects, the Vanadium recovery project, I think that's more directly impacted. What we're seeing is Europe's supply of vanadium chemical has come wholly and solely from Russia. So Europe needs a domestic source of, large volume, high purity, ideally green material, and that's something that we're offering. So the tailwinds, courtesy of a regrettable situation, are really quite strong, particularly for that one.
But can you as a business, can financiers make decisions on a situation which is, like I say, it's deeply regrettable, but it's new.
Yeah.
It hasn't been going that long. So, is the decision about, well, let's see how this thing plays out, or is it like very firmly at the door of, do you know what? More than ever, we need independence.
Yeah.
And self-dependence on our ability to produce, whether it be chemicals or there's a multitude of things, I suspect. And have those conversations.
It's exactly that. It's exactly as you say. If anything, it's a tailwind saying, if not now, when? Here's a circumstance which really means we need some, resilience in the supply chain. Let's speed these things up. I mean, in terms of speaking to financiers, it's really for us speaking to fund managers and brokers and retail mum and dads, and in Europe in particular, because it's a new listing where we didn't raise money, we're just trying to raise awareness more than anything. A lot of companies weren't familiar with Neometals.
Right.
So that's the task at hand for the time being, with no ask, is just raising awareness.
Okay.
So if anything, what we're hearing is the offering, I guess, the Neometals story and business purpose is pretty unique, particularly in London.
Yeah.
Not too many companies offering suite of battery materials, coming without mining risk, and also with some green credentials associated.
So, but how are they viewing? I want to get into projects in a second. There's certainly the European projects in a second. But how are they viewing this whole recycling thematic? This green component, because it's fairly nascent in many ways.
Yeah.
How important is it? What are you hearing in terms of people's propensity to maybe price that differently or value that differently, given there's no kind of comps out there?
Yeah, look, the appetite for this thematic is huge.
Right.
And certainly having spent 2 weeks speaking to a multitude of people, for sure, not enough opportunities to participate with
but do they know
exposure
why?
to that.
Do they know why? Yeah, do you know what I mean? Sometimes I jump on board a thematic, great, people talking about it, but what do I as a banker or a funder do about that? How do I value a company like you as a result of that? How do you value yourselves, quite frankly, in those conversations at the point where you may go and raise some capital?
Yeah, well, there's obviously this concept that if you are, at the other end of the supply chain, I guess, if you're not extracting raw materials and you're more of a mineral processor downstream, then you're likely to attract an industrial or maybe a clean tech multiple. We've only got small revenue coming.
Right.
But then you put yourself in a different basket. And so that seems to be drawing attention.
But is that part of what you're saying? Because, with Germany, it'll be a little bit of revenue, but it's a kind of proof of concept thing, right? Where you say, here's the process, it works. Here's the process, it's economic, and here's with one partner. There could be multiple partners in licensing and etc. Satellites, and however the heck you want to play this thing, right? So how long is that process going to last before you can ramp that up? Because that's great as a demo, but you got to show scale, profitability, all of those wonderful things that businesses need to do. What's that look like going forward?
So, in order of prominence, there's 3 business units, if you like. They're demarcated with different team. Like, we've set them up so that, we've got the bandwidth to manage each, and you've got big partners doing a lot of the heavy lifting. So with the battery recycling, because that's the one you're focusing on there, essentially you've got demonstration plant, which was built over, let's call it a year and a half through COVID. Our partners SMS did a terrific job. Demonstration trial for the purpose of our studies is complete. It's been a success. Part of the plant, which is
success for who? I mean,
success for Neometals insofar as it's proven what we set out to do.
Right, and who's at the other side judging you? Who's the other side of the fence judging you? Because you need to meet their criteria too, not just your own.
Well, one example is Mercedes, for example. So they've been judging for 17 plus months and have sort of connected with us, put their brand out there as using as technology partner Primobius. But for our purposes, success, data goes into next evaluation study, outcomes in June. Meanwhile, the actual first part of the plant, which is a shredding and beneficiation circuit, we've now secured a permit to allow that to be a commercial operation. So that's in train, that's operational and ramping up. And to your point, when does this happen at a larger scale and how do you evaluate it in your head? The next big decision for us is with a partner called Stelco.
Right.
So Mercedes is happening. In the background, we're looking to supply equipment, design, help them construct a big plant in Copenhagen.
Which they pay for?
Yep, they pay for it.
That's the model, okay.
That's the model. The other partner, Stelco, is probably first cab off the rank with a larger plant. So Mercedes and our own shredding facility are at 10 tonne a day. Stelco is a 50 tonne a day. And we're looking to make an investment decision in Q3 on that. So what that looks like is Stelco have a license, and we also have an option to essentially recompense them for money spent on site selection and front-end engineering work, and then be up to 50-50 in a recycling joint venture with them. So that becomes very real on the first large plant.
And is it exactly the same technology from Mercedes as it would be for Stelco, or are there tweaks needing to be done Because I'm just thinking, how much of this is proprietary IP to you, and how much of that vests to them over time? What will these relationships look like when you're kind of, again, scaling up?
Yeah. So same technology, different feeds. There's nuances.
Right.
But for the most part, you can think of it as it's the same technology. The shredding and the refining back end, the real patent pending smart sit with the refining. We protect that very, very closely. We guard that. And, ultimately, as you roll this out commercially, what does it look like? It looks pretty similar to what we've designed originally, but then it will be constantly optimized as we learn.
Right.
So the refinery that we have in Hilschenbach, we've kept that as an R&D facility. Mm-hmm. So at the front end, you've got cells going through for people, and we charge a fee for the privilege of taking them off someone's hands. Mm-hmm. We keep the black mass, that's worth money. Mm-hmm. But as soon as we have a customer that wants to do a dedicated trial, and Itoshu we're doing one for shortly, it's not a huge operation. The revenue, it's more about actually getting operational wherewithal to show people. So we can pause that, do a dedicated trial. The material goes through the shredding section, comes out through the refinery, and then people can evaluate the chemicals that we produced.
Great. Where I was getting at with that question is trying to understand how quickly you can scale up. Because if you're trying to create a sort of unique system or flow sheet for each sale that you do, it just slows things up. So the bulk of it is predominantly the same, with a few tweaks around the edges and optimized ongoing, obviously. Okay, so that's fine. And you said something there that sort of interests me, certainly around the economics, which is trying to understand, so people pay you, or so you pay, you said people pay you to take the stuff off of their hands and then you kind of process it. Is that right? How long do you think that lasts? Because at some point, what you're being paid for becomes really, really valuable in this kind of, closed loop system you're trying to create here. So, how will the economics evolve over time?
So it won't last forever. So that facility in Hilschenbach is shredding and beneficiation. Mm. It's permitted to 10 tonne a day. Mm-hmm. The capacity is larger, but that's what the permit is. And so in the foreseeable future, that will last because Europe doesn't have the recycling capacity yet to cover the amount of spent cells that are out there. Mm-hmm. But in time, for sure, when the volumes increase markedly, you're going to see the people who have those cells that need recycling saying, well, these are fairly valuable. Yeah. Let's come to another negotiation.
Right.
But, for the immediate term, that will last. But bear in mind that's shredding and beneficiation. And then when you come to a fully integrated solve, which is where we want to go, the shredding and beneficiation is an interim step for us to ultimately close the loop. And that's what all the customers need. Notwithstanding the economics of just shredding and beneficiating, they need to be able to show how they close the loop for their stakeholders. So it's just a stepping stone to a broader pathway. And if you don't have back end, you don't provide the full solve for where the legislation and all the levers are going.
Okay, that's the interesting bit in this, that the evolving role of the feed and the economics around the feed, and it sounds like you're obviously on top of it. I'm just wondering then, what do we expect in terms of the kind of annuity stream of cash coming into you? Does it kind of tail off but stay steady state for as long as you can sign contracts for, or is there the ability to bolt on additional revenue streams as part of the business model going down further down the line?
So one way to look at it, if you Stelco, for example, so you have small revenue coming from a shredding facility in Hilschenbach. Then Mercedes, you've got an arrangement where the purchase, we supply, build plant, and then the real hook with that relationship is for us to do a good job over the currency of a 5-year cooperation. We understand where they're thinking about cell chemistries because they're going to make their own cells. How to industrialise, how to automate, how to dismantle. So really valuable. But the end game is doing a great job and being there as the technology provider for cell scrap and end of life.
Got it.
And then with Stelco, for example, Primobius, which is our joint venture, we own half of it, will then make a JV with Stelco. So it means Neometals' interest becomes 25%.
Yeah.
And then the economics are proportionate. But each circumstance is probably a little bit different depending on what people want. Where we're seeing it is most big customers, They need an industrial solve, which we offer with, performance guaranteed plant with the backing of SMS. And then how they engage with us, I think we've kept as flexible as possible. We see most of them wanting to partner, where we share the economics. They've got the feed, we provide the chemicals at the back end.
Yeah.
But that too could evolve over time.
Yeah. I guess what I'm really interested in is how do you make yourself as sticky as possible, right? You insert yourself and it's very hard to remove you from the process. And so come back to what seems a harmless sort of comment from you about, we continue to optimize. Optimization and technology is critical because the thing about technology, it changes and evolves. And there's always going to be a better solution coming down the line. And in this case, better damn well be you for someone else that tries to insert themselves into your arrangement, right? So that kind of R&D component, that's going to be clearly based here in Europe, presumably, because all the brain stress is back in Oz at the moment, isn't it? So how's the team looking over here now?
Give or take, there's some pretty smart chemical engineers and metallurgists at SMS as well.
Right.
So I think you optimise. So let's say, for example, you've got several joint ventures. So we've got a pipeline that the public's aware of that's been disclosed. And then behind that, hopefully you see more coming out in time. And if they're joint ventures, you're going to have smarts for each joint venture.
Yeah.
Each of them are probably going to, approach R&D separately. But you'll always have that Hilschenbach facility as an R&D centre as well.
Yeah.
And then if you take Merck, for example, that's exactly why we want to be there, so that we can learn how they're thinking as an OEM at the coalface, as it were.
Yeah.
Chemistries, the splits between the different, NMC varieties. Are they going to do lithium-ion phosphate? Can we help with that? The answer is yes, but what's the arrangement?
Okay.
So that's how we stay sharp and stay sticky.
Yeah.
And really, it sounds simple, but you've got to do a good job. So then eyes on the prize, don't try and do too many things. We're not really bandwidth constrained. SMS is a huge company.
Yeah.
But you got to do a few things well initially.
Absolutely. Okay, so that's kind of interesting on the battery side of things. Should we pop over to the Scandinavia?
Yeah.
Vanadium, as you said, we referenced it at the beginning. Obviously, the kind of Russia situation is potential opportunity there for you. I mean, that's obviously the second big one in the portfolios. So what's happening on the ground? You went and did a site visit of stuff I saw you in London last time out. So what's the news from there?
Yeah, so that was a real eye-opener for me. I mean, we've been stuck in Perth, unable to travel for a long time. So we went to Pori, where we had a site selected to do the processing. So essentially there's 3 stockpiles in Europe that belong to SSAB. That's the first project opportunity. And the concept is to move the stockpiles to Finland, where the government's really supportive. So we got there, had a couple of stakeholder engagement days and good success, a lot of face-to-face discussions with the mayor and all the rest of it. So that was really encouraging. But we signed a lease at the port of Pori.
Oh, very good.
So we've secured a site to build the processing plant.
Everything you need, as much.
Literally. There's CO2, which is a reagent because we're sequestering CO2.
Yeah. That's
their power, deep water port, the whole bit. So it's a really impressive location. The government seems to be behind it 100%. Likewise, the local municipality. And we also signed an off-take MOU with a company called Betalar.
Right.
And Betalar are looking at using one of our byproduct, which is, a glorified calcium carbonate or limestone material in a cement product where they're trying to reduce the CO2 footprint of concrete and cement.
Interesting. Okay. And obviously not worth much at the moment, but what's the time frame on that in terms of its ability to contribute revenue?
For the byproduct or just generally?
So the byproduct I'm focused on, because I have not heard that before. It'll
dovetail into the timeline for making vanadium chemicals, which is your key target out of the process.
Okay, cool. And what is that time frame actually? Just remind me.
Yeah, so looking to make the catalyst for this one is 30 June belts and braces feasibility study. And thereafter make an investment decision December of this year with a view to forming the joint venture with Critical Metals, who put their foot on the feed supply originally, and then prepaying for 700,000 tonne of the stockpile from SSAB and moving it to Finland, and then production 2024. So slightly longer term than the recycling.
Yeah, but it's I think when I first started talking to you, there seemed to be a lot of cabs in the rank waiting. a couple of got away quite strongly. The third one, which we'll talk about in a second, is following, and the fourth one and the fifth one. So it's good. There's a process there, but let's just stay with in Scandinavia. SSAB there have to be some kind of, what was it, deposit or payment for the feed?
Yeah.
How does that work?
Prepayment. So essentially, there's
all of it up front.
There's 2 million tonne in 3 stockpiles.
Yeah,
and we'll pay for 700,000 tonne of it.
Right.
Point being, I say prepayment because then the material will sit there for a little while before we start processing it in the operation. But at which point we are completely wedded to the concept. We've got the JV, we've bought the material, we're away.
Yeah. But is SSAB wedded to you? What are their options? And so you can come back to this question around feed, right?
Yeah.
Whether it be recycling or the SSAB mountains that they've got sitting there. How wedded are they to you or the contract or the agreement? How do you secure decades worth of this stuff? Because that's really interesting.
Yeah. Look, absolutely wedded to it. I'm not aware that they have alternatives. Others have tried. We've come in with a new approach, an alkaline leach.
Yeah.
You don't have the heavy acid tails sitting there. So getting permitted to do something like that with heavy acids in Scandinavia, would be pretty challenging.
And this stuff's been sitting around for like a long time, right?
Long time. And they've been assaying it every day for 30 years. And we put a drill rig on top of one of the stockpiles and we've assayed it. And sure enough, it aligns perfectly with their data.
Right.
So it's just quite an extraordinary source of feed that has already been dug out of the ground. So it lines up with our strategy. SSAB, they need a solve. I mean, those stockpiles, unless they extract the vanadium themselves, which is not core business, they need to do something with them. So here's a neat fit.
So great neat fit because you're paying for it.
Yep.
I don't know what the government's doing in terms of credits for processing this, or I mean, I'm trying to work out, other than actually you paying them and then you producing vanadium and then you selling the market. What are the other kind of either credits or you've got one byproduct agreement in place? What else is to be had?
Ticklers, there's more to be had.
Right.
So, I mean, essentially you make money by selling vanadium pentoxide, one. Two, you've got 2 byproducts.
Yeah. We
call one of them SSM. I think we should have a new acronym. Stabilized slag material. That's the calcium carbonate.
So sexy,
doesn't it?
Right. Well, if it makes money, it is.
Yeah.
Right.
Then you've got sodium sulfate.
Right.
Ready market. The volumes aren't huge. And then, there's a value associated with generating carbon credits. There's a process. We don't model that because we're trying to be conservative. But there's a value to the carbon credits, a not insignificant one.
Yeah.
And the other thing which is interesting is if you are importing vanadium from elsewhere into Europe, the European border adjustment mechanism would kick in. So if you are digging a hole in the ground with a slightly dirtier footprint, there'll be an impost. Whereas we're sitting here domestically with a very green process. So there's, we're, fingers crossed, that impost is not there, and therefore you have an advantage on the cost curve against importing of materials from traditional sources.
So that's fantastic. I hadn't really kind of factored in the carbon credit side of things. That's why I'm intrigued by that, because it's very, very topical. Some companies creating huge value for themselves, but not doing very much, but talking about it. And I'm intrigued as to how can you manage that? Do you have to bring someone in? Or is an existing system which you kind of just insert yourself into? Yeah.
Well, when you gave me the double point, me personally, No, we'll have some experts help us. There's a notification procedure, and there's just a sequence of steps to get recognised as someone who is preventing CO2 from going into the atmosphere.
Do you have to show that with SSAB, or was it because of your process that you kind of get those?
Well, you're obviously going down a path to avoid that. That's not really been part of the discussion. Yeah. Can you share the economics of that with others? I suspect so. So that's what we're establishing at the moment.
Yeah. Okay. Interesting. Okay. Wow. That's food for thought.
Yeah.
That's a big one, actually. Right. Third,
and you mentioned a bunch of cabs at the rank. To be honest, there's 3 technologies, 3 business units, simplifying things a little bit. We spun out the nickel, we sold Mount Marion. Things are getting simpler with a real targeted thematic for us now. So the third one is a lithium chemical technology, homegrown, and the concept is using a feedstock of lithium chloride, so from a brine source or spodumene, slightly more advanced on the brine work that we've done, producing lithium hydroxide, but bypassing the need for all the reagents which would otherwise come, soda ash from Wyoming. It goes on a boat, it goes up the Andes in a truck comes down. That's bad.
Yeah.
So that's what the process is all about, and it's using electrolysis to split the two. And we've got a really big partner called Bondalti, and they're chlor-alkali experts with a huge site in Estoril, Portugal, all the equipment. And that's what that's been waiting for as a partner. They're co-funding a pilot, and that's where
that's
we're
the
at.
kind of nirvana for a lot of the lithium companies. Come on and talk to me about how they're going to technically crack the code, as it were, and produce hydroxide instead of carbonate, instead of whatever it is that they're actually doing. So you're kind of getting to the end point more efficiently, and I guess in a more green way, which is obviously need to be able to say that. And so, with regards to that, money, decision making, time, and then you've got the partner there to enable it, because that seems to be the model here. Find a really good, solid partner. Obviously, you've got to come to the party with something too. So, tell me a bit more about this partner. The big old outfit.
Yeah, big old outfit, Bondalti.
Big balance sheet. So, but what's your contribution?
Our contribution is the technology.
Okay.
So in terms of the purification front end and the way we're applying electrolysis to this feed material is something they're not as familiar with. They do it with sodium chloride.
Okay.
And they generate a bunch of byproducts that they're in the market, in the value chain, selling chlorine, etc. So they're the absolute correct partner. And the opportunity for us is flexible. Again, you can toll treat, you can partner with people, but say, for example, you have a somewhat stranded European company that is going to generate hard rock, spodumene, and then they're saying, well, in order to secure capital, we have to do something more to value add. We're going to make chemicals. It's pretty complicated. So here's an opportunity where you're providing the ability for them to just provide you an intermediate, which otherwise, is not as commonplace for lithium chloride to be a saleable material. And we would take that, turn it into chemicals under a range of different scenarios. One could be toll treating, one's in partnership, and that's a bit of a central theme. We're trying to stay flexible with these projects because OEMs and a lot of these companies are trying to establish, the chess pieces keep moving. So we want to stay flexible. Okay.
Well, I guess we'll hear more of that as things progress. I want to talk to you about the market. Okay, the market just sucks at the moment for everyone, and whatever the sector, whatever the vertical you're in. And do you feel that having been a miner, continue to evolve, and I don't know. In your case, do you feel like you're moving downstream, upstream, sideways? You're a different category completely. Things have changed for you. You're not being judged by in the same way that you perhaps would have been, or the natural resources space is being judged at the moment. So that's been to your benefit, I guess.
Yeah.
Or is it because people just don't quite know where to put you?
A little bit of the latter, if I'm honest, because. Well, I do know that we're going downstream rather than upstream. That much is clear to us. How do you categorise us? Are we a clean tech company? Are we a chemical company? Chemical industrial? It's more of the latter, and I think it depends who you're talking to, frankly.
Right.
The fund managers have different categories for everything, but the reality is we're not a mining company. That's really clear. I think, in time with revenues, we should be, sitting with multiples akin to what a chemical or an industrial company has, which advanced chemicals.
Very interesting at that point.
Yeah.
It really does.
And so, this is literally why we're here, and we've got the opportunity to do it and see, potential partners, etc., and do other business in Europe. Is just raising awareness that this is different. This is no longer a mining story per se, which is not to say we don't want to speak to mining investors, because it's the same value chain. The miners really understand, or the people connected to the mining industry, they really understand the supply chain.
Yeah, it's interesting times. We'll see what happens on that front. I guess kind of just to finish off is, we've talked a lot about R&D during this conversation, right?
Yeah.
But specific project-based R&D and evolutions thereof. With regards to new ideas, back at HQ, R&D, new ideas in terms of the next cabs off the rank and what problems they're going to be solving? Are you just focused today on, let's get these three things up and running and there's enough to be doing there?
Yeah.
Or is there kind of a bunch of new ideas coming online anytime soon?
We've got a pretty dedicated focus to making these three things work. We don't want to get bandwidth constrained. Always open to trying to pursue and run down opportunities, and if it's a terrific one, then of course you can find more people, etc. But for now, very focused on those three.
Right.
There's some legacy R&D, that's sitting there that we keep keeping alive, etc. And sometimes it requires a different market or a different catalyst where we don't need to spend a great deal of money. We've invested in a small way in some other companies that have been strategically relevant to us. We've put some money into, a company that's using vanadium in the anode out of the USA. We remain agile, I guess, but we see a lot of organic growth. Like, don't need to go find the next and the next project because it's not mining anymore. We don't need resource extensions or M&A. The growth is coming from different JVs and different jurisdictions, and so our cup's pretty full.
Yeah, no, I kind of meant in terms of like, that's what I said, what problems are you going to solve, right? Because that's what you become, problem solvers. And by working with some of these joint venture partners, there may be other bits of their industry, their portfolio, which need problems to be solved. So it's really kind of looking at it from that perspective. Final question.
Go on.
Okay. You have been a dividend payer.
Yep.
Because you had a big chunk of money that you got from McManus, right?
Yeah.
As you move forward, and obviously you paid a lot out, was it over $50 million? Also, maybe more.
85 million.
85 million to date. So what's the next 2 years look like? Because obviously some of these projects will start to kind of ramp up on the revenue, which is great. That money, the big lump sum, is going to be dwindling down. So will you continue to be a dividend paying company, or is it now the gains to be done through the re-rate because you're moving downstream, you're a chemicals company or whatever people are going to label you as?
So we don't officially have a dividend policy is the first thing I'd say. Okay. What we've tried to do is maintain returns to shareholders.
Right.
But we've improvised a little bit. So last year we spun out our nickel assets, formed a new company that's completely separate to us called Widgie Nickel.
Yeah.
But shareholders all got an in-specie distribution.
Yeah.
And they've done very well out of that. Share price is going pretty strong. So I think we look at this now and say that cash is very valuable. We've got a home for all of it. But we're also very mindful of having had a history of returns. I think we just have to think about it differently. Does it have to be cash? Can it be in kind? What can we do to stay a little bit innovative?
The stock's done quite well as well. Okay, we're not going to. Last year has been pretty good for shareholders. There have been dividends along the way, but there's no dividend policy. Okay, that's an important point to make. Widgie is obviously been really quite good, and with the kind of first two big projects off the rank, they will get into revenue within the next 2 years. You expect some sort of meaningful contributions, well, certainly from the battery side of things. Timing on vanadium is a little bit
more like 2024.
2024, okay.
And Eli just watched this space.
Yeah.
But I think on the dividends as well, you rightly would have people saying, if you're still giving me cash, I question whether you know what to do with your money, and we really know what to do with the money at present.
That's where I'd be. I'd be like, keep your money. Yeah. I'm very happy with the share price and where it's going, continues to go. And the occasional little win like which is nice, but again, not essential. But you've looked after us. I think it's fair to say. Okay. Hey, look, but let you get back, press the flash, go tell the story, remind people, that you're over here now on AIM.
Yeah.
Is that easy going? Is it easy being on AIM compared to the ASX?
If you asked our CFO, it was tough to get on, and I was involved in that process heavily as well. Yeah. It's different. It's different.
It's like asking a farmer, is farming tough? It's always tough. So CFO, okay, he's over here with you as well.
Yep.
He's having to go do a few meetings now, is he?
Yeah. Well, the world's changing now, and so we've got new investors, different theme, and he needs to be across it as well as Chris and myself and the others. So it's all a learning exercise, but, we're getting a good reception. Onwards.
See you soon.